Hi, everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, the rally in the Magnificent Seven, plus Netflix, continues, although I sense a bit of a stutter step very recently. On the positive side, you will see that the fair market value measures, that's the dotted line on the charts, which rise and fall with earnings estimates, has been sort of ticking upwards recently. The analysts are not immune to strong price trends, and they tend to follow them up by raising their earnings estimates. Whether it's a matter of just in case the markets are trying to tell us something or not, I don't know, but that's what they've been doing. Now, a reminder, if you enjoy FANG Friday, but consider yourself to be more generally a value investor, kind of like myself, then stay with me until the end of the video to hear details about my free value investing webinar. Actually, almost a hyper value investing seminar that will be taking place in the new year. I will be covering an aspect of the stock market that very few people know much about, but which can produce some spectacular gains. Spaces are limited, but you won't want to miss out, so make sure that you watch at the end of the webinar today. Anyway, right now we need to take a close look at the FANGs and what's been going on, but as always, before I do want to say thanks to everyone who likes this video and all our subscribers. It really helps to grow our channel, and we appreciate it greatly. Okay, let's start off with Amazon, and this is very interesting. The last couple of weeks or so, Amazon has just been hugging its bubble price, that 7.4 times book. Just does not want to seem to break out and run, despite the fact here that you can see that the analysts have been raising their earnings forecast, and hence the fair market value is going up. Anyway, this is very interesting at this moment. Watch carefully. The second stock, which has been also hugging its key valuation level, has been Meta. Now, it has sort of oozed out over the line at its MSG price and has been, I think, holding today, although just right on there as I see the close. But look, again, the analysts have been raising their earnings estimate again. Alphabet has staying on the positive side of the MSG price. That's 5.5 times book value. And again, its fair market value has been rising. And so the pressures would appear to be on the upside. So as long as the MSG hangs in there, so would I. NVIDIA, well, NVIDIA has had a very, very strong increase in its fair market value thanks to that spectacular quarter when their margins hit the 73% mark. And the analysts are expecting that this trend is going to continue. Now, the stock has nearly recovered to its HB6 price, which is 33 times book value. So we will be watching very carefully to see if the stock can break out here, as it had some time ago, but then lost that advantage. Anyway, we'll see. Apple, just a little tiny uptick, Just a little tiny uptick in the earnings and the fair market value. The stock, to me, kind of remains in kind of a little bit of a downtrend, although recently it's been doing well. And actually, this gain here has been somewhere in the order of 20%, to the degree that, as you can see here, the stock is almost got back to its old high, and you can see that the market cap has almost got back to $3 trillion again. Microsoft continues in that nice little uptrend that it has been in for some while, and there's even actually again a little uptick here in the earnings and intrinsic value. I think, frankly, that is more due to the analysts than to anything that the company has said, because they have been very, very cautious. What's going to happen when, if the stock reaches its HB2 remains to be seen. I would probably want to hang on until that happens, however. Netflix is such an interesting company. We had a gap down, another gap down, and then when the stock got back up to its bubble price and kind of lost it, again, it gapped up again on very, very strong earnings estimates. So that this renewed strong trend of estimates appears to be justified. Whether the company can get to the HB1 or not, I don't know, but as long as the stock hangs in here and as long as those estimates are as strong as they are, I would very definitely hang in. Finally, Tesla. Well, you can forget any change in the earnings and the fair market value. It sort of continues in a downward trend. Now, the stock, as you can see here, has been trading either side of its HB2. And that isn't terribly surprising, because on one hand, we have the market sentiment that was driving a recovery. On the other hand, we know that the fundamentals of the electric vehicle industry have been going from bad to worse. So it'll be interesting to see if the stock can hang in here or not. Now, to briefly summarize, that nice general price recovery across the board continues. But Amazon and Meta need your ongoing minute attention. Both look to be trying to break out over key breakpoints levels and give us a buy signal, and maybe trying to do so today as I speak. There's probably no rush. In cases like this, we often get a breakout and a pullback kind of pattern. Alphabet, Nvidia, Microsoft, and Apple all appear to be recently in pleasant, if modest, uptrends. Although Nvidia and Microsoft are high enough and close enough to the next higher breakpoints that close attention is warranted. Can they go higher? Or are they at a point where soon they will be running into strong resistance and reversing course? Netflix is in a world of its own. Not one of the Magnificent Seven, but still a FANG. Its very recent numbers have given it a new lease on life above its bubble price. Just keep an eye on it. Finally, I would still watch Tesla carefully. It's dithering at its HB2 price. That's 12 times book. Market sentiment may be with you right now, but its fundamentals are definitely not. Be aware of the risks in this particular stock and watch carefully. When a stock is in what I call a push me pull you kind of a condition, or what I call indecisive trading, I have seen such stocks go in all manner of different ways. As an advisor for my clients, however, I have to admit to extreme uncertainty here. To an extent, I frankly think that investors are gambling in this stock. Anyway, keep a close look on the key FANG charts, and let us hope for even more follow-through. Now, the FANG stocks are at one end of the value spectrum, but they are expensive by any measure, almost hyper-excessively valued. But what about the other end of the spectrum? Very cheap stocks do not get there by accident and require special analysis. Our proprietary charting system can help you find stocks that are cheap, may have huge upside potential, but just like the FANGs, they require careful handling. We call these blue zone stocks, not to be confused with blue chip stocks, which they may not be. And while we are not a stock picking service, we have pointed out blue zone stocks to our clients in the past, and some of these have exploded in price. I would like to take some time and show you how to use our SVA charts to find stocks that have this type of massive potential, while alerting you to their risks as well, which can be equally huge. On Friday, January the 5th, 2024, rather than having FANG Friday, I will be holding a free webinar for anyone interested in learning how to find and handle cheap stocks with tremendous upside. I've used this method my entire career, and it has worked handsomely for me. If you want to learn more, you can sign up by sending us an email with your full name to info@strategicanalysis.ca. Spaces are limited, so sign up today. We have already had many of you sign up, so we are looking forward to having you, if you have not. If you have signed up, you should have already received a confirmation email, so check your inbox. If you do not wish to wait, but want access to our database of our charts, along with the suite of tools used to navigate the entire client website, go to www.strategicanalysis.ca/pricing and sign up for a 3-month trial at a reduced rate. If you sign up before the webinar, we will make your first month free so that you can get an understanding of the charts before the webinar. I think you'll like it. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.